the weekly mixtape for December 9th, 2017. If you're a returning reader, welcome back. If you're new to the show, new to the blog, thanks for stopping by. As I mentioned last week, I'm going to start doing these videos to recap the week's events that may be impacting your financial planning, your investments, your portfolio, or some other things that I just think are interesting. One of the things you might notice is I have a new intro to the video. As this blog gets a little bit more followership, I don't think P. Diddy's going to like me using his All About Benjamin's instrumental for much longer. So before I get a cease and desist letter from Bad Boy Entertainment, I thought I would just go get my own beat. So I'm pretty excited to have that. I hope you enjoy that. With that being said, let's dive into a few things from this week that you probably have heard about, read about, may have some questions on. I'm just going to touch on those real quick. So the first is the non-elephant in the room because everybody is talking about it, and that's Bitcoin. I'm actually myself getting a little exhausted with it, and I'm to blame as well. I'm contributing a lot to the noise on Twitter. I was on Pete the Planner's show last week, but it aired this week, talking about cryptocurrency and Bitcoin. If you're new to that space, I think it's a good video to check out. If you have been reading about it and are familiar with it, you can probably skip it because it's just the basics. But nonetheless, Bitcoin continues to dominate the financial news, FinTwit. But the good thing is I'm noticing that my clients that are not living in this world, they still don't know very much about it. So that means that it's not too crazy yet. But for us in the financial world, Bitcoin is the big conversation, and you're probably hearing more and more about it. So just this week, Bitcoin showed us how volatile it can be. We had a couple 20% up days, then some going back down. So earlier in the week, Bitcoin hit 19,000 a coin on some of the exchanges, and then this morning when I checked, it's Saturday morning, when I checked it was just under 16,000. So you can see these wild swings, which is why in my writing, in the blog posts that I share, the things that I highlight, I'm trying to scare everybody out of investing in this area so that if they decide to invest, they're really committed to it and they understand it. There's lots of reasons to not being investing in Bitcoin. One of those is this week when it was going crazy, making that run from 16 to 19 in one day. You saw some of the exchanges like Coinbase and some of the other places that you can buy and sell these cryptocurrencies having some issues. Not being able to log in, not being able to buy or sell, buying and selling at huge spreads, meaning you put an order in to buy when it was 16,000 and you ended up paying 18,000 for your investment. So showing some of the risk to this new asset class, currency, whatever it might be classified as, is a reason to be careful and knowing what you're doing and trying not to follow the herd and getting caught up in those exciting days. Maybe if you're going to be trying to dabble in a little bit, wait till a calmer day just to put a little bit in and get that experience. So Bitcoin, the big news, as I mentioned, I spent some time with Pete the Planner last Friday. It aired over the weekend here locally on a radio station and then on his blog. I have a link to it down here if you want to watch it. So that was a fun experience. 30 minutes is not near enough time to talk about this subject, so I'm looking forward to going back on his show in the future so we can continue the conversation. Bitcoin, that's the big news right now. It's entertaining to say the least. I also want to give everybody who's not participating in it the permission to stay out if you don't want to. There's nothing that says you have to dive into this space and get into something you're not comfortable with because it is very risky. So it's okay to not be interested in it. It's okay to not be putting money into it. You can sit this one out and still be achieving the goals that you want and working towards your financial plan and your investment strategy. So that's enough on Bitcoin. Next up, the tax bill continues to be in the news, and I wanted to highlight one area that I've been hearing get discussed more and more, and it's the desire to keep, the desire to add a component in this tax bill that will force investors to recognize gains on their investments on a first in, first out basis. So we'll do a quick little lesson on that, but FIFO is what you may hear people call it, first in, first out, FIFO. But what this means is on your non-retirement investment accounts in the future, if this were to be included in the tax bill, when you go to sell an investment, the IRS taxes are going to force you to sell your first shares in. Now, this does not guarantee a bad outcome for an investor, but if you think about being a long-term investor and you bought shares in a stock 20 years ago, there's probably a pretty good chance that your cost basis, meaning the amount of money, your initial investment, So if you put in an investment at 5 20 years ago and today it's 20, your cost basis is 5, you have $15 of gain, which will be subject to tax because now you're at 20. So the new rule is going to force you to recognize that lowest cost basis in theory, if it's a long-term investment, to generate more tax revenue. That is different from today. First in, first out is a way that you can calculate your taxes on your investments, but you're also able to do an average cost, which just means you average all of your cost basis over the years of investing, and that's your cost basis. So if you bought it at 5 and 7 and 10 and 12 over the years, and now it's at 20, you add up all those, find what the average price was, and that is now your cost basis to determine how much you're going to pay in taxes. You're also currently able to pick the shares that you want to sell. So if you bought some stock over the years and it was actually at a higher price or above where the stock price is when you sell it, you could say, I want to sell these shares and kind of control your capital gains and your taxes. That potentially is going to be going away. And that's a big deal because that changes the way that people plan for their income in retirement, plan for their investment management over a long period of time. I understand why they want more tax revenue, but it could be a big deal. Now, what could be the implications aside from us paying more taxes in the future on our non-retirement account? Again, this is non-retirement investments because if your investments are in an IRA, 401k, Roth IRA, whatever it might be, if it's sheltered, the buying and selling doesn't matter. Your cost basis doesn't matter. This is for a taxable brokerage account that you're putting in money after taxes to invest. You get a 1099 for it every year for dividends and distributions and when you buy and sell. These are the accounts I'm talking about. But what does it mean? Aside from more taxes in the future, you could make an argument that there may be some selling towards the end of the year to get rid of those lower cost bases, do some average costing, try to establish new basis for the future. I don't know if that will be the case, but that is one thing that is being mentioned as a potential short-term impact of this FIFO rule that may be a part of the new tax plan. So I bring that up because this will definitely impact your investments if you have non-retirement assets as a part of your plan. You and your advisor will probably need to come up with a new strategy, maybe take some action before the end of the year if it makes sense, but going forward the management of that account may change because of this new rule on first in, first out. So that's the big thing on the tax bill. Still a lot of it is unknown. A lot of politicians are on TV and they don't really know what's in it or how things are going to play out. So it's kind of frustrating, but that's where we're at as of this week. A little economic news. This week we had non-farm payrolls. This is the judge of how the employment world is going, and non-farm payrolls were better than expected. So it just means more people were hired over the last month than was expected. So that's good. Unemployment continues to remain low, around 4%. And the jobless claims numbers fell. So I'm not going to give you all those. You don't necessarily need to care about what the actual numbers were. Just know the jobs report, the new hires were better than expected. Jobless claims went down. Unemployment still stays pretty low. This is a trend we've seen for a while now, so this is not anything new. It's just good to see it continue. Final planning investment thing. It's the end of the year. December, which means is now. Prediction for 2018, what's the market going to do, what kind of growth are we going to see, how many times is the Fed going to raise rates, which that'll be on next week's video because the Fed is meeting to announce if they're going to do a rate hike. Looks like probably, but we'll cover that on the next video. But the point of this is you're going to hear a lot of bold predictions. You're going to have high predictions, you're going to have low predictions. They're worthless. Nobody has that crystal ball, nobody knows. As an advisor, it's extremely frustrating that people are able to go on these shows, make these predictions, and have no accountability. In my world, if you go on TV and you make a prediction, especially a bold one, high or low, and you're wrong, you're not able to come on for another year to make any more predictions because there's no accountability, and unfortunately, investors not working with a professional often take these to heart and act upon them. So I would just tell you, take these predictions with a grain of salt. No one knows what's going to happen. Yes, we can look at where business is trending and where the economy is trending to kind of come up with these, but there are so many variables that we don't know that can impact the market. So tune those out. Don't worry about them. They mean nothing. It's fun conversation, but nobody really knows. And if somebody gets it right, they look like a hero. If they get it wrong, nobody remembers, and they do it again next year. So ignore the predictions. On a more relaxed note, a couple fun things. Locally, last night was a fun night for us here in Indiana as our Pacers beat the Cavs. The Cavs are on a tremendous 13-game win streak. Our little Pacers, who are kind of maybe in a rebuild, identifying themselves, handled them very well, played good. The boys and I watched it, had a good time. So for us Hoosiers, seeing the Pacers beat the Cavs was a lot of fun, so that's big news. And the other big one for me, you may think it's silly, but I'm going to show you something. This is Kendrick Lamar's newest album, but it's also his most recent album. So his newest album that he released earlier in the year, called Damn, he re-released it starting with the very last track, running it through the first. Pretty cool thing that he made an album that can be played forward and tell one story, and then played in reverse and tell another story. One of my favorite rappers. I'm a hip-hop head. This was exciting to me. Yes, before this even came out and this was publicized that you could do this, play the album backwards, I created a playlist to be able to do it so I could hear it. Still bought the album when it came out because I'm a huge fan, and as a fan you support those that you like. So I was very excited that this finally came out. I do think that the reverse order of Damn is better than the original order. So go check that out. If you have Apple Music, it's on there. You can stream it, check it out. But I was pretty excited about that. With that, I'll leave you to enjoy your weekend or your day whenever you're watching this. I'm looking forward to continuing to do these videos. And I will be getting an email address for the blog, so if you have anything you want me to discuss or any questions, you can contact me there. Until then, just find me out on Twitter. It's at Justin Castelli, JUS10 CASTELLI, and be happy to try to incorporate things that you want to see. So I appreciate you stopping by. Again, if you're new, welcome. If you're returning, thanks for coming back, and I'll see you next week. Oh, I forgot, this is the mixtape. Down below you'll see all of the articles from this week. Hope you enjoy those. Have a good one.